Welcome to Finance Deep Dive. Today, we're diving into something that's flashing a major red warning sign for the U.S. economy. On the surface, things might look pretty strong, but underneath it all, a massive crisis is brewing, and it's all about the country's national debt.
So let's just get right to the numbers, shall we? The U.S. national debt has officially blown past $34 trillion. Just try to wrap your head around that. If you spent $1 million every single day, it would take you more than 93,000 years to burn through that much cash. It's an absolutely staggering figure, but honestly, the size is just the tip of the iceberg.
See, here's the real kicker. What's got economists so worried isn't just that massive number, it's how fast it's growing. The crucial point here is that the national debt is expanding way faster than the U.S. economy itself.
In this chart, it really drives that point home. We're looking at the debt to GDP ratio, basically how much the country owes compared to everything it produces in a year. Right now, it's already sitting at 125%. But look at the projection from the IMF. They're saying if nothing changes, we're on a rocket ship to nearly 143% by 2030. That is a seriously dangerous climb.
Okay, so the big question is, how in the world did we get here? Let's break down exactly what's pushing this number into the stratosphere.
So what's really driving it? Well, it pretty much boils down to three main things. You can think of it like a perfect storm, really. We're paying for the past, spending a ton in the present, and we're just not earning enough to cover it all. Let's knock them out one by one.
All right, first up, the interest payments. The U.S. is now paying over $1 trillion a year, just in interest. Let that sink in. That's not paying down a single penny of the actual debt. It's just the cost of borrowing the money in the first place.
Number two, all those big-ticket programs. The costs for huge obligations like Social Security, Medicare, and of course the defense budget, well, they just keep climbing year after year. And that puts enormous, relentless pressure on federal spending.
And finally, number three, you gotta look at the other side of the equation, the money coming in. The problem is, with a combination of tax cuts and corporate income that's been weaker than hoped, federal receipts just aren't keeping up. It's simple math, really. Spending's going way up and income isn't.
So you add all that up, the interest, the spending, the sluggish revenue, and what do you get? Well, you get a single very stark warning from the International Monetary Fund. They looked at America's fiscal path and called it one word: unsustainable.
But hey, this isn't just some abstract number on a government spreadsheet or a political football to be kicked around. No. This debt creates a very real ripple effect that washes over the entire economy.
And you better believe the financial markets are paying attention. For them, this has nothing to do with politics. It's a fundamental economic problem, because at the end of the day, government debt literally changes the rules of the game for money, for everybody.
Okay, so here's how that chain reaction really works. It's pretty straightforward. Step one, the government has a bigger deficit, so it has to borrow more money. Simple enough, right? Step two, to borrow that money, it issues more treasury bonds. Step three, now to get people to buy all those new bonds, it has to offer a better deal. That means higher interest rates, or what we call yields. And that brings us to step four. Those higher rates, they act like a giant vacuum, sucking money out of the system. The result is tighter global liquidity. Basically, it gets more expensive for everyone to borrow money, not just in the US, but all over the world.
And because of that exact domino effect, you've got investors, central banks, pretty much everyone with a stake in the global economy watching U.S. bond auctions like a hawk. They're all asking the same huge question: will there always be enough buyers for all this new American debt?
And that leads to the real multi-trillion-dollar question, doesn't it? What happens if that demand starts to dry up? If investors start getting skittish, the U.S. would be forced to offer even higher interest rates to convince them to buy, and that could send borrowing costs into a dangerous spiral. So all of this is setting the stage for what could be the ultimate financial stress test for America, pitting its current economic power against these really deep, long-term vulnerabilities. And this really gets to the core paradox of the whole situation. On one hand, you have what looks like a strong, resilient U.S. economy today. But on the other hand, it's all being propped up by a fiscal foundation that is showing some really deep, really significant cracks. And that leaves us with this powerful final thought to chew on. The world's largest economy might soon face its biggest financial test. And it's not coming from the outside, it's coming from within. Its own debt. Hey, if you like the content in this video, please don't forget to subscribe. It really does motivate us to keep posting more of these.